What's going on, everybody? Welcome back to another episode of the Marky Makers Bootcamp series. And I just started again literally yesterday. So today I'm coming out with another episode for you guys. I just wanted to start it a little more entertaining so that I have your attention for a little bit longer. Again, I just want to remind you guys that this series, if you're starting from this episode, if you're just finding this video, my goal for this series is to start from the very foundational beginning, like literally all the concepts from scratch. So if you are new, don't watch this episode, go to the very beginning. That's where I started at a slower pace and teach you guys everything that you need to know before we dive into the deeper aspects of all the models, strategy, and reading the actual concepts. So go back to the first episode. But in today's episode, I wanted to go into time frame alignment. I was already planning on coming out with a YouTube video on this topic. And the reason why I think it's such an important topic is because once you learn these concepts, you will see, wait, they're on every single time frame. 1 minute looks different than the 4 hour. 1 hour looks different than the 15 minute. There's so much different concepts and they're all over the place. So it's about using that time frame alignment, starting from the higher time frame, scaling down, and making sure that you're not forgetting this one key idea. And that is going to be that the higher time frame rules. So sometimes that means you just got to stop on the higher time frame before going lower, because you've already found what's relevant to current price action today. So I'm just running some errands. When I get back, I'm going to film the rest of this video on time frame alignment. And this is going to be episode 9 of the ICT Marky Makers Bootcamp. All right, boys, let's hop straight into this video. So we're going to start from the monthly time frame. This video is going to be about time frame alignment. It's one of the most important skills to learn after you actually start learning for value gaps, order blocks, breaker blocks, any of these concepts. You want to know how to use the different time frames to actually trade them. So one of the things is higher time frames are more significant than the lower time frames. So higher time frame is more significant than lower time frame. And the reason why this is true is because the higher time frame, like let's say it bounces off of a monthly zone, the next candle, or even the candle that is currently moving, that candle is going to be running for at least a month. So if it bounces off of a monthly level, it's going to give you a bullish narrative for at least a month. So you can see this current candle right here. We're actually rejecting off of a 3-month candle. So you can see how far we've actually run from this 3-month bullish FVG. We close inside, next candle opens, and we have 3 months of a bullish narrative. So going into the lower time frame, you can look for confirmation. Monthly time frame is going to give you narrative too. I just sent out an announcement in the Telegram, which if you guys join with the link down below, you guys can see my market analysis every single week. And what I said is this monthly candle, it's going to create this monthly IFVG. So once this candle closes, most likely September's monthly candle is going to come back to tap into it. You don't have to be looking at the monthly time frame more than like once a month, but you want to still pay attention to what's going on the monthly time frame. See if it's going to be running back into a monthly area. And then as you go lower, you pretty much just use the weekly, daily, 8-hour, and even lower for confirmation to look at whether it's actually doing what it should be doing, whether it's aligning with the higher time frame narrative. Recently, we had a bearish gap. We've been respecting this one. And if you guys watch the streams from the last 2 weeks, we actually had a very high win rate around this area because every single time it closed inside, I was just going for sells. And then finally we closed above it and we turned around because now this is disrespecting the bearish gap. It's going bullish. So the lower time frame gives you the entries, right? So even the daily, it's kind of giving me the narrative of what's the daily doing today. But you want to find the higher time frame narrative, the highest time frame that's relevant to you. So like if we look at the monthly right now, this gap that I marked out at the start, it's not really relevant to us right now. It's not going to be relevant until August candle closes. So we don't want to look at that. As we go to the weekly time frame, if there's something on the weekly nearby, we can use that. But if there isn't, which there isn't actually, there's nothing on the weekly nearby. The only weekly gap that we have is down here, and we used this last week. It was an IFVG. It closed above, used it to go higher. I actually traded this exact setup here. And again, you guys can watch all the recordings from the streams, but you want to find the narrative on the higher time frame. Then once you find the narrative and you see that price is starting to set up and start to run, that's when you scale lower time frame to whichever time frame is significant for you to get an entry. What I also sent out to the inner circle group today is I sent out this fair value gap to the left, and I said, guys, I choose not to trade Mondays for one simple reason. Monday's close is going to give me so much data, and I want to know, I don't just want to come in and start selling from this bearish gap. I want to know if Monday's candle wants to close above it, because then we're looking for a continuation buys. Otherwise, if it closes inside, then we can expect a retracement back down into, let's say, the discount or this gap down here. There's a bunch of fair value gaps all over the place. What matters is the most relevant one to you right now. And this one right here is the most relevant to us right now. It's the start of the week, so I'm not going to be trading it. But when this candle closes and Tuesday's candle opens, that's when I'm going to be actually trading depending on what Monday's range does. when Tuesday's candle opens, now I'm not just going to be on the daily. So let's say, for example, Monday's range closes above this gap. So what I'm going to do is I'm going to wait for Tuesday's candle to open. It's going to open here. And as it starts to turn bearish, it taps back into this daily gap, which now is a bullish IFEG. And if you guys are struggling with these concepts, I have videos up on the channel. And I also covered this in the earlier episodes. So if you guys are unfamiliar with it, go back. You're not ready to be learning this information. Once it taps back in, that's when I would go from the daily. I'd split up my screen and I'd go in this exact scenario. I'd go down to the 30-minute, 1 hour, 15-minute, 5-minute, and I'd look for bearish moves that create fair value gaps. Then I look for price to start to reject because obviously the narrative is bullish. We're expecting it to go up. And as it goes up and disrespects the bearish gaps, we use those for our entries to target the narrative. So if the narrative is bullish, we're looking for buys from this area and we're going to ride that with the daily candle. So that's pretty much how you do it. You start from the higher time frame, the highest time frame actually, that's relevant to you right now. So at the end of this month, we're going to be on the monthly time frame. Right now, that's not relevant to us. So we're on the daily, we're on the weekly, whatever's relevant. Weekly is not relevant to us right now because there's no gaps nearby. The only next weekly gap is this massive one right here, but it's already filled it halfway, so I wouldn't expect anything. I'd mainly be looking at highs on the weekly time frame. So there's nothing relevant to us right now. On the daily, however, there's a gap that we're currently inside of right here. So now we have data, we have targets. We can actually expect price, depending on what it does, to move from this area. So that's why I wait for Monday's range to close and I trade it starting from Tuesday's range. In terms of lower time frame, again, time frame alignment, you kind of want to go in and figure out what the price is doing. So let me go in one of the trade examples and let me see if I can pull up a stream and then go into showing you guys exactly how that stream played out. So we're going to go over to YouTube. My YouTube channel is Trades by Marky. I know you guys are watching this video right now, but if you guys want to search it up, if you guys ever forget, it's Trades by Marky. And you guys can go watch any of the streams from this week. Let's go into one of the earlier streams. Let's go into this one. So here we were looking for sells. Why was I looking for sells? You would know by starting from the start of the video. I guess I only started the recording a little bit later into the session, but you guys can see, there you go. So I'm on the daily time frame. I found an immediate rebalance, which is right here. Take a look at this bullish candle. So in this current day, which is a perfect example actually, in this current day, the new daily candle opens. This is already going into Friday's range. We have a daily fair value gap below. This is a bullish gap. We have also haven't been here yet. So what I'm waiting for is a potential daily entry. So I find the daily targets below, I find the daily target above, and I wait for one of these areas to get traded into. So I'm going to go now to the lower time frame. You can see that I was expecting it to go up into this area first. When it did that, daily immediate rebalance, which happened really fast into the day. We ran up almost right away. Immediate rebalance. I went in and I started looking for a setup. I saw it already tapped into a bearish 4-hour gap. Now I'm looking for lower time frame confirmation. You can see on the left-hand side, I'm on the 30-minute now. I'm looking for this 30-minute IFEG. On the right side, I'm on the 1-minute already looking for a setup. I'm expecting it to just pull up and it's going to give me an entry from one of these fair value gaps that forms on the way down. So as you guys can see, as it starts to run down away from this daily range, I'm trading in Asia session. So you guys can see on stream, it pulls back. I'm already looking for a setup. I'm looking for it to take out this NOIC, tap into this bearish gap. We get our trade from this area and it expands very nicely from that area. We secure some partials. I already closed 140 and we leave our last position running. This last position actually did great, by the way. So let's see. It expanded towards the end of the stream. We took another partial. There you go. So you guys can see right there, it ended up running lower from there. I moved my take profit way lower and we let the trade run. Why did I move my take profit lower? I'll show you guys this exact day. Remember, daily time frame. What were we aiming for? We were aiming for this gap. We can literally go into my Telegram on the 13th of August, which is when that setup was playing out. And I can show you guys, we took partials right there. This was our trade from stream off of a 30-minute IFEG. And we executed on the lower time frame. And we targeted the daily gap, 4313. That's the exact TP that I had on stream. And that's the exact area that we actually ran into. So time frame alignment is very important. You find the narrative on the higher time frame. Then you start going down lower time frame to look for confirmation. And then you go even lower time frame to place a precise stop loss, such as the 1-minute time frame or the 5-minute time frame. But if you guys are purely expecting to be profitable trading only the 15-minute or the 30-minute, you're completely wrong there because that's just not going to work. If you're trading momentum, for example, you'll be able to catch some profitable trades, but you're not going to actually understand where it's going, why it's going there, and you're missing a lot of information. So that right there is the Marky Makers ICT Bootcamp video number 9 on time frame alignment. I hope you guys learned something from this video, and we're going to have another one going more into depth with some actual back testing. But that's going to be it for today. I hope you guys learned something new, and I'll catch you guys in the next bootcamp episode. Peace.